kind of a pioneer for OZ funding projects in Colorado with some really cool projects in Grand Junction, Glenwood, Meeker Craig, Natarita, out there in the Paradox Valley, just really cool stuff. So maybe Shawn, give us a quick introduction and overview of what you've been doing for the past 3 years with OZ funding.
Cool. Yeah. Thanks, everyone, for introductions and all, Bonnie and Jason. So mid 2017, we founded 4 Points Funding, and that was prior to Opportunity Zones, and have been really focused on real estate and business investing in across all of Western Colorado. And so when Opportunity Zones came out, a lot of people, including State of Colorado, OEDIT, private parties, reached out and said, the intention of Opportunity Zones is to drive investment into, quote, distressed areas. And, at the time, rural was somewhat synonymous with distress. So, really asked us to help play a part in figuring out how best to apply this to rural Colorado. And so, for all of 2018, 2019, it's just been kind of a roadshow and driving to communities, working with, local leaders to help sort of uncover, areas of overlooked but high potential to take advantage of this Opportunity Zone incentive in the way that it was intended, right? Bringing dollars to places that otherwise have been kind of overlooked.
And it's been, I guess, since 2017, we've seen about $10 billion invested in Opportunity Zones. And give us an idea of how they were kind of scripted. I know a lot of communities were looking at, wanted to be included and weren't, or places that you wouldn't imagine would be included were included. The idea was to kind of look at low income, overlooked, distressed communities was the actual word. How were those communities sort of identified? How were those boundaries drawn, Shawn?
Yeah, I was chosen on a state by state basis, and I think Colorado did a really good job. There's always areas. In fact, I was on a call this morning, for people from Craig trying to say, could they get a different part of Craig designated because they thought there was more opportunity. But we used to kind of say, it's not the distressed zone incentive, right? This was sort of thoughtfully, especially in Colorado, pushed towards an area where, there was a belief that we really could drive dollars into those areas. Some of the most distressed areas, ones that, arguably need it the most, were not included in the designated zones because nobody was clear on how you could help organize capital that way. But I will say, so in Colorado, it was based on new market tax credits or new market tax credit. There's census tracts and rules surrounding availability for that for the new market stuff to classify a census tract as distressed based on primarily on average income. And 78% of the eligible zones were in the urban area. But when the state of Colorado went to nominate the zones, they actually nominated 60% of their zones in rural markets, knowing full well that, they didn't need further incentive to invest next to Rhino. Now, that process is never perfect, but really we're trying to find that sweet spot of places that could really take advantage of the capital and be perceived as good investments and attract investors, yet still met the intent of places that, might otherwise not receive that investment. And, sort of contrast to some other areas like Portland, very famously, like almost all of downtown Portland was designated, which is a little challenging, right? So people question, like, how did downtown Durango get in? It's a good example. Downtown Avon is in, and those are areas that, we don't typically think of as distressed, but they're also one of the few areas in a broad region that could attract a certain class that, that was eligible, and could attract a certain class of investment. And so, that was kind of the line, I think, in particular that Colorado tried to ride and did a pretty good job at it.
Yeah. And that's the real challenge, is finding an area, one, that can attract investment, and two, that would provide community benefits. And that can be a narrow line to balance every once in a while, right?
Yeah, and I think it is, right? And it's when the nominations first came out, one of the phrases we used, as often as any, is unanticipated consequences, right? So one place makes it in the zone, and because it's census tracts, it's literally like you can be on the left side of the street and you're in, and you're on the right side of the street and you are out, right? That's just sort of how the maps were drawn, and they weren't drawn specifically for opportunity zones. They were just leveraged census tracts. And so, those that ended up in the zone ended up, I think with a really significant advantage, and the ones that, are out of the zone, it just became that much harder to attract capital. So there are definitely some challenges surrounding that area, but did I think the best the state could to figure out exactly how best to drive, dollars into these communities.
So before we get too deep, let's take a little wonky detour here with your slideshow, and you can show us kind of how an actual opportunity zone works. You take capital gains and you can defer your taxes on those, and to where they're eventually eliminated. But you've got a really illuminating slideshow presentation. If you could share that with us, Shawn, and kind of, it really shows.
I don't know about really illuminating, and it's only a couple slides, but I just want to make sure we were on the same, we at least had some fundamentals. So obviously underlying all this, there's a lot of complexity, but at its core, it's really fairly simple. It's a tax incentive, part of the 2017 federal tax bill, to defer, reduce, and eliminate your gain. So if I were to sell a piece of property, stock, whatever it is, and I realize some sort of capital gains, short-term or long-term, if I invest those this year or 2021, you actually can invest any time through 2026. But if I invest in the next 2 years, I get three benefits. First is I push that tax bill out to 2026. So that deferral allows you to sort of invest and use that money that you would have to hand over to the government today. The other is that you get a reduction, and prior to 2020 it was a 15% reduction. 2020, 2021, you still are eligible for a 10% reduction in that bill. So you're paying at the then current rates. So frankly, it's sort of a hedge against potential increase to the tax rate, but you are paying a reduced rate in 2026. The big kicker is if you hold that investment for 10 plus years, technically 10 to 20 years, you get complete forgiveness of capital gains made within your opportunity zone investment. And that can be a multi-point boost to your investment. And I actually have a sort of a specific example. And so I know this is, not like your normal talking slide. It's pretty complicated, but I'm just going to kind of step from top to bottom and call out a few numbers. So assume for a second here, I don't know that, my mouse shows up or whatever, but whoops, back it up. This, if I were to, sell a property, it could be 1031 investment, just, whatever it may be, and I realize capital gains, and I'm going to use $1 million there in that A as an example. In the non-qualified opportunity fund investment, you've got to pay your taxes today. We assume a rate of 23.8%, sort of standard for cap gains, long-term cap gain. And so you're left with $762,000 to invest. So if I drop down to this new investment, by deferring, I'm investing in the opportunity fund example, I'm investing $1 million versus $762,000 in the non-opportunity zone investment, right? So that means you are making a bigger investment. You're getting a bigger piece of the pie, which is a sort of critical differentiator. And that B there, right? We've pushed those taxes out to 2026. We can also see I've reduced it from $238,000 to $214,200, right? So I'm paying, I'm assuming the same 23.8%. But now on a $900,000 bill, not $1 million. I'm sure almost everybody's jumped all the way to the end here, but I'm going to keep stepping. That middle section there is income. So one of the things we'll talk about, like with what makes a good opportunity zone investment, it's hard to hold something for 10 years if it's not producing income along the way. If you're queuing up all your gains for 10 plus years down the road, it needs to be a huge win. So most opportunity zone dollars are going into real estate. Those typically produce income, right, in the form of rent, that sort of thing that can be distributed. Because you made a bigger investment, you own a larger percentage of the investment, and anybody that cares, we could dig into the full example behind this. You end up getting more income, right? So even post-tax, that's not tax protected. The income isn't standard income, but you're getting a bigger chunk of that and therefore making more money along the way. And then that big kicker there, that's sort of D and F, right? Again, because you have a bigger piece, right? We're targeting a 2.5 to 3x multiple So you get your original investment back, your million plus $1.5 million. In the case of the opportunity fund, you're getting a little bit less on that return because you didn't make as large of an investment up front, right? Because of the tax deferral being lost in the non-QF investment. And you see, you got to pay taxes again on the non-QF investment, right? So assume the 35%. There's a lot of details and ways that individual investor situations could change this, but pretty straightforward example to say, you get to make a bigger investment. You're paying less in taxes between now and 2026. You get a little more income. And then the big deal is more gains that are tax-free on the end. Obviously a really substantial boost to the investment. And so that's what's luring people in. A lot of buzz about opportunity fund investment. I think a really, really powerful incentive. And people still, even very sophisticated investors, don't understand exactly the benefits and how they work. So, getting a handle on this, whether you are an investor or you're trying to attract investment, I think is super important. And just so we can get out of slide universe, is the only other slide I had. Part of the reason we're excited about applying this to Western Colorado in particular, but Colorado in general, rural Colorado, is we're forecast to have pretty spectacular growth, and all of us who live here can understand why, right? Our quality of life, but the prior to COVID, these are the numbers, right? Western Slope was looking at a 67.2% increase, 2015 to 2050. During just the life of like our current fund, say 2020 to 2035, there are certain places like Eagle that we're looking at as much as a 40% boost. So that I-70 corridor taking a huge influx of residents. And COVID-19, we think, is only going to accelerate that inflow of residents. The ability to work remotely, whole variety of things that we think makes this an even larger opportunity as we look across this very long 10, 15-year horizon that opportunity zones, are really designed around. So I hope that kind of helps set the basis for this deferral reduction and elimination. I'll leave this up, but you can kind of jump back into some Q&A or fireside chat, however we're phrasing that. And happy to answer as many questions as you want about this and follow up after, of course.
And Shawn, we got a question from Ryan. Can you roll a 1031 exchange into an OZ investment and then have all that capital gain deferred? Yeah,
so you can. In fact, so we wrote a whole blog about that. It's one of our larger sort of sources of fundraising. So, and it's to get not too technical, you're not really rolling the 1031 forward. That's how you talk about 1031s, right? So it's a special class of real estate investment where you can defer taxes essentially indefinitely. But what you have to do, you qualify a property as a 1031, anytime you sell it, you have to roll all that money, your basis and your gains, into the next 1031 and into the next 1031, next 1031. Literally the only way to sort of escape that is to die or realize the benefits and just pay your taxes. And so opportunity zones offer a really sort of intriguing way to get off that 1031 hamster wheel. You sell your 1031 property, you realize the gains from that sale, but instead of paying taxes, you roll that into an opportunity zone fund and get all the opportunity zone incentive benefits. And it's particularly appealing to people because you're only rolling forward the gains or some portion. You don't have to roll forward all of them, any portion of those gains, but you can separate out your basis, your original investment. So you can kind of get some money back out of your 1031 and still preserve a lot of tax benefits.
Yeah, that's amazing. So we've seen some, sort of good press, bad press. The Urban Land Institute just came out with a pretty comprehensive, they called it an early glimpse, that showed that a lot of the investment in OZ so far has been real estate focused and not necessarily looking at those entrepreneurial businesses. Talk to us a little bit on how maybe the OZ here in Colorado, the OZs in Colorado are maybe a little different, because we have seen investment in businesses here.
Yeah, it's happening. I think there's a few threads that'll run through this when we talk about, is the incentive realizing the intent of the bill and getting money where it should go and creating this kind of long-term growth. But yeah, the final regs weren't passed until, the end of last year, basically, right? Like, we were a year into this 2-year period before people really knew how this was going to work. And there's just a reality that, these long-term stable assets, right? Like we have multifamily housing and outdoor-focused hospitality, just as examples, are very clear things that you can park money in. I know that, our glamping site in Natarita, 120 acres with a river running through it, is not going to pick up and move out of the zone. Whereas businesses have a much more dynamic life cycle. That time might be right to sell before you realize you're 10 years and get the full benefits. And so it took a while for people to kind of fit their heads around what it might be. So some of the initial investments that went into businesses, they were individuals that they were like, I can just take advantage of the deferral. Like, I hope they sell in 5 years and it's this huge win. We'll cork the champagne as we, talk about not getting the full OZ benefits. So, some of that happened. There are now getting the more organized zone funds. The last round of regulation did make it easier to run more of a VC style fund. So Pearl Fund is a national fund that has a relationship with Colorado Outdoors and Montrose. They had a fairly, well-publicized $1 million investment in Wedge Brands. And so that was more like business investment. Then it really took all the ingredients. I think this is kind of the sort of a model that we are going to need to have to attract businesses to the Western Slope. That was a case where a Montrose developer, Colorado Outdoors, was prepared to build a build-to-suit facility and perform an opportunity zone investment on the real estate side to house the business, and helped organize, actually over $1 million in capital to support the business growth, to get them to move into that region, into the zone. And more of that's happening. More of these funds are coming up and more VC style investments. So I think it's a really important part of realizing the bill. We don't do that in our fund because it's a totally different risk profile, asset class, story to the investors, all that thing. So the organized real estate investors that can treat this like as a standard real estate fund, which is how it needs to be pitched, right? Opportunity zone incentive is second. That's sort of the cherry on top that makes you believe you might hit your numbers. Core standard real estate terms and investments, like, just had a real head start because of the way the legislation came out. Also still really important though to our region, right? We need housing. We need, better housing stock in regions. We need cheaper housing stock in other regions. We need investments in sort of fixing up some of the more blighted properties if we want to continue to lure people in from Front Range, from wherever.
And real quick, run us through what your fund is invested in so far.
Yeah, so we're actually on our second fund right now. And so we did that as a strategy, right? You've got your 10-year hold on the tail end. We didn't want to have somebody investing in 2019 stuck on a 10-year hold timeline for somebody investing in 2026, right? So we're doing a series of 6-month funds, and we will have some projects span no more than 2 funds. So as an example, in Fund 1 and 2, we have 2 multifamily projects, one of which is in Glenwood Springs, and that's attractive for us. Glenwood Springs obviously kind of booming right now. They had some great investment as the state invested in kind of re-swizzling their off-ramp, everything else. So they're really kind of bustling. And but this is new multifamily right on the end of the RAFTA line, so that people driving an hour and a half, to Aspen to do their service jobs, can make better use of public transportation, still live downstream in a comparatively affordable place, right? And so that's unique just with respect to purely servicing, the workers, I guess, from that extended community. The multifamily in Grand Junction is a little bit different, and too bad we're not all in Grand Junction and doing this in person. I'd encourage everybody to go walk the site, but Las Colonias, for anybody that's not familiar, a huge investment and I think opportunity for the town of Grand Junction, reclaiming riverfront property, ultimately to be connected with 7th Street, running up 7th to Main Street, and creating a new kind of outdoor rec headquarters. Bonsai, I understand, is supposed to be putting a zip line over the river. They've got a new water park, and we're building multifamily adjacent to that park, and are going to include in part of that, actually just leveraging part of the land and the awesome, space of being river adjacent and on a bike trail that runs basically to Utah, to put in a glamping site there as well. And so we'll have some tiny homes, some other things. And so as we get back to whatever new normal is, we don't know yet, but as they start filling that amphitheater that they've already built out in Las Colonias, as we get more activities, kind of going again, to be able to support people actually coming in, even for events, leveraging that space in the cool new park. And I separate those out and kind of call it out because it's a different form of, sort of community development, different benefit and impact to those communities, right? Building that density and getting some bodies down in and around Las Colonias. That's going to house the workers that they're trying to, for the companies they're trying to recruit to headquarter there, right? All kind of symbiotic 1 + 1 = 3 sort of community building. And then our others comparatively small tuck-in, I won't go into quite as much detail, but glamping in Telluride, really unique to live in, the umbrella of Telluride and being able to have connections to New York Academy of Arts and, and others to create it's going to be a really unique experience there. And a tiny home motel and trailer in Meeker. Love that story because actually it was a distressed property that, we found as a result of our other business. Somebody built out this thing at the end of the last boom and bust cycle with oil and gas. Thought it was going to be filled day one with 100 oil field workers that never materialized. Foreclosed on, SBA lost the loan. We ended up buying it for 10 cents on the dollar for millions of dollars of infrastructure. And to be honest, that's the only way that kind of level of investment in Meeker really made a lot of sense. But to be able to go in there, plunk down a bunch of tiny homes, create something really cool, have the whole town show out and be incredibly supportive and excited about having some new investment. And that's triggered now. We understand across the street, somebody's planning on opening up a brewery and a wedding venue, right? It's absolutely perfect. So, those kinds of investments are really important. And lastly, a food hall in Craig, right? A chance to be a restaurant incubator and create a new meeting space and, a center for some organic collisions to, help that town sort of start the conversation or continue the conversation of life after coal.
So talk a little bit about working with investors when you bring up, a mission-driven investment or, community impact, those sort of things. Those aren't necessarily, for your traditional investor, that's not necessarily attractive. Your traditional mindset as an investor is quarterly statements, ROIs, growth, check it every day sort of thing. How can you work with investors to kind of get them? Obviously, there's a goal with the 10-year deferment of their capital gains, and they like that. But when you bring up Meeker and Craig and Natarita with places to invest, chances are, if you're a big investor, you've never heard of those places. And how can you convince them that this is not only going to have a good community impact, but it's going to be good for them in the bottom line, and they are going to see that 2.5 or 3x growth on that investment?
Yeah, it's not easy. So we joke, right? Denver's a tier 2 city. What does that make Meeker other than completely off the radar? And they don't really understand the dynamics of Glenwood Springs and Grand Junction either, by the way, right? They know Telluride and Durango because they have a second home there, maybe if we're lucky, and it ties into the area at some level. So that's helpful when you're talking to people outside the area. They've vacationed here. They maybe even have a vacation home here. And that helps the conversation a lot, but there's a lot of skepticism. And, we were fortunate enough to be recognized by Forbes and Sorensen Impact Center as an OZ catalyst, right? And won a national award for top fund with a rural focus. And frankly, we haven't played it up very much because if you talk about impact to somebody that's concerned about profit, they're skeptical, right? If you talk about profit to somebody that's concerned about impact, they're skeptical. Are you really doing the right thing? And riding that gap is hard. It means that we just need to be that much more dialed in, right? We need to be very clear about the value proposition of these individual communities. Not many people know, right? Meeker is surrounded by mega ranches, right? I think Bloomberg just bought one for $42 million just outside Meeker. There's a handful of places and things there. The Waltons helped build the new mountain bike trails there. There's a handful of mountain bike trails, 250-mile of OHV trails, right? So since you brought up Meeker, like we need to be very clear on that value proposition, and we need to be more conservative on our underwriting. So there's industry standards, right? If you're going to do a hotel, like what's your average daily rate, your ADR, what's your occupancy projections, and we need to err on the conservative side of all of those, and we still need to have a good return because people are really skeptical about these areas. Place like Grand Junction, the rents are rent is expense everywhere. Relatively speaking, it's comparatively low there. Part of that is most of the housing stock was built in the 70s, and it's not really going to command higher rates, right? There's a whole missing section. There's some really nice homes. There's not really nice rentals. There's a bunch of comparatively rundown rentals. We're missing this middle gap in the people that we say we want to attract here. And so you can't provide historicals. And those things are always really challenging. But we've kind of landed on this spot. If we want to attract transformative capital, we need to be able to drum up deals that are going to produce really strong returns. And we need to package them with very conservative underwriting in terms that people from, the Front Range and, to New York City are familiar with.
And talk a little bit about working with the communities out there. It seems like, you definitely identified a need in Grand Junction with the Las Colonias, adjacent to the Las Colonias Park. Probably same with Glenwood, reaching that sort of affordable multi-family density, walkable to the Rafter line. Talk a little bit about that investment, because you hear sometimes communities say, we like the idea of the investment, but in 10 years, are these people going to walk away and we're just going to, what happens when everybody cashes out in 10 years? So there's some concern on the ground out here, is we're going to have a good 10 years, but what happens in 10 years when those investors say, I need my money back?
Well, I think that goes back to the business versus real estate piece, right? If you're putting in a multifamily housing, like it's not leaving in 10 years, right? Yeah. You're building something, well enough and maintaining it well enough that it will grow in value and you can get, high dollar at the tail end. But as an investor, we're really, well community aligned to put something up that is going to be enduring and continue to attract people, not, run that area down, right? I know there's a lot of skepticism about startup businesses, and I hear this more on our West Slope Angel side of like, we start these businesses and as soon as they're successful, they're off to the, the Front Range or whatever it is. I think there's more challenges there, but that pendulum is swinging a little bit too, as people realize, we have a more stable, less expensive real workforce and less expensive real estate. We are going to find hubs where certain kinds of businesses will continue to stay. There's a tech startup in Carbondale that really a San Francisco company. They had a few employees in Carbondale, and well over a year ago now, they said, we're only hiring in Carbondale going forward because they, the engineers actually stick around, right? They don't roll over every year. They're less expensive. They're happier. Like we're equally productive, and it costs us less money. As that story gets out more and more, we'll find like tech hubs like Carbondale. I think, Grand Junction and Montrose both have, great manufacturing potential. We have an opportunity to grow communities where these companies will really fight to stay, and we can attract more. And once you get enough of a center of gravity, then the need to leave is reduced. So focusing on hubs where there really is growth potential is kind of an important part of, I think, that long-term strategy.
Yeah, that makes a lot of sense. Governor Polis in his interview with Connie Baker from Marble Distillery today was talking about the unique opportunities on the Western Slope with the entrepreneurial landscape startup kind of ecosystem here, tapping those companies in San Francisco and New York because so many of them vacation out here. And so they have that familiarity. And was hoping maybe you could talk a little bit about how the pandemic has influenced and raised sort of the profile of rural living, Western mountain living right now. We're certainly seeing more people interested in setting up shop out here. I know it's a lot nicer out here in Eagle, Colorado than it is in downtown Denver during a pandemic.
Yeah, no doubt about it. Yeah, I mean, it's been interesting. Even pre-pandemic, I was surprised at the number of companies that were contemplating, relocating or locating in, Western communities. A lot of outdoor rec focus, right? And get it. Like, we might as well live in a place where we can walk out our door and test our products, right? We've heard a lot of those stories, but the pandemic has definitely accelerated that. So we do have obviously a really unique demographic, and I've always talked about, it's not just, capital, it's not just dollars, that we know we have wealth in our, Steamboat, Aspen, Telluride, Durangos of, of the Western Slope, and a lot of pockets people don't quite realize. That's there, but it is that intellectual capital. And so, a lot of it's anecdotal, right? Look at the home sales across the area and influx of people. But one of the more telling things I thought was really interesting and opportunities is for us to embrace second homeowners. To your point, if it's a second home or third or fourth sometimes, right? These are people that, are financially wealthy, they're connected, have great experience from a broad variety of industries they can bring. Well, I know somebody that does land management, like, BLM type stuff, slash and burn piles, large scale sort of, water diversion, et cetera. And during the past few months, he picked up 3 customers here in Steamboat, all 3 of them second homeowners that had never seen their home in the summer. They'd owned it for years. They would just come out here to ski and that was it. And because of the pandemic, they're like, to your point, this is a lot more comfortable. I might as well just, be in nature. I have an internet connection. I guess we're all working remotely anyway. So, you got multiple people that had never spent a summer out here, and now they're realizing, like, it's actually the best time of year, right? I think we've got a great opportunity to pull more of those people in. And when they're here, they become very connected to the community, right? They want to support this local ecosystem and have an anchor and be tied to the activity going on here. So incredible resource that not a lot of places can boast. And, I think regionally, we really need to find a way to dig into that. That's why we do a lot of work, of course, with West Slope Angels and trying to organize those people to pay attention to startups. But I think they're also, they're the same people that are going to invest via opportunity zone funds like ours and individually in the region as they, the more of them that come in.
And sort of on the, we just saw your slide that showed pretty spectacular population growth on the West Slope in the next few decades.
No surprise, right?
Yeah, that's a big number. What do you kind of project for the Western Slope, and how is OZ investing in Colorado? Like you'd mentioned it earlier with Colorado Outdoors, the sort of establishing a model for investing in businesses and rural communities. What's your projections for the Western Slope, and how can it be a model, and what's worthy of the nation's eye when it comes to sort of creating a new type of investment opportunity in rural areas?
Yeah, I think the population growth is inevitable, right? We've all, I think if you're in a resort town, I always joke, right, that the last person to move in is the last one that was okay, right? Nobody wants to be overrun with growth and have housing prices driven up and the trails get busier, all that stuff. I think a certain amount of that is unfortunately inevitable. Opportunity zones give us the chance to help control and drive that to a large extent. And, when I say what's my prediction for the Western Slope, I think that there's some obvious hubs that are poised for growth, right? Just certainly along the I-70 corridor, some towns that are sort of down valley, if you will, from some of the resort towns for housing workforce, where we have the opportunity to build really desirable communities that are more thoughtfully planned to create better affordability, better accessibility to outdoor rec activities, and blend this sort of urban-rural living. This is something we talk about a lot, and it's a little bit nebulous, I think, but people generally understand, right? This thought of, if I'm in Denver, what's urban living, right? Well, I don't necessarily need to own a car. I walk to work at bars and restaurants and grocery stores, or I hop on my little scooter or whatever it is. And we're seeing in sort of increasing number of places where that's viable in rural communities, right? People want to be able to ride their townie to go get their coffee in the morning, have some good food choices, a little bit of diversity, and still be minutes from, trails and rafting and skiing. And that's accessible, but we have a lot of places where we really need to dig back in and make that work. So, on a call this morning, a lot of people, workforce from Steamboat, live in Craig. We need to do some work on the transportation system to make that as easy and inexpensive as possible. But, Craig is working really hard to increase access to the riverfront. Getting bike trails built has been a little bit of a challenge. Like, those things need to be in place because it is a really competitive universe when people are looking at, like, where in Western Colorado would I move? So finding and developing those hubs, I think there's going to be some real winners over the next decade where people create and drive towards thoughtful plans for, what I'll call urban style living in a small mountain setting. There's a little bit of, you can have it all. And, we're going to see, I think, healthy growth in more places than not as a result. And that's my hope, and doing what we can to support that.
And, it's sort of a two-part question here. What can communities do to help, draw the eye of an OZ fund like yours or an OZ investor? And what can policymakers do? We've talked a little bit about this in the past. Like, what needs to be done to help lawmakers at both the state and federal level, as this program evolves? We start to identify challenges. We start to identify maybe even missteps. What can we do to make sure this program stays vibrant and the original mission of directing money towards sort of overlooked communities remains on point?
Sure, let me answer this. There's a few questions piled up, not many. I promise we'll get to all of them, and I'll respond individually if needed. So I think the opportunity zone kind of, the incentive, the designation, the zones, they kind of are what they are. There's a lot of continued talk, but every indication we have is the bill is stable, has bipartisan support. It's going to go on. So this is about how do we best raise awareness of good investments in our region, and how do we support that? And more often than not, right, we say part of the capital stack, right? That opportunity zone investment oftentimes isn't enough to push investments over the finish line in terms of making them really financially attractive. So I think communities can do a few things at everything from, local to state level in terms of, one, making sure that there's a cohesive sort of, plan and support, whether it's, talk about it in terms of zoning or other things, but having a clear vision for where the community is going. Because if I want to put up, multifamily, I want to know that there's going to be encouragement for somebody else to come along and build the brewery and the child care center and other things that make that a really great place to live. We may play a part in some of those other investments. We may not, right? Having a community that is helping to organize multiple players to bring this whole vision together is very helpful in terms of carrying those conversations really far forward. And then I think, anytime communities can find ways to create additional incentives, back to Montrose, they did a great job of waiving tap fees, doing all kinds of things to smooth the rails, right, grease the rails, to help encourage investors to come in. Other communities are trying; they're further behind. But some of the deals we've looked at, the town was desperate for housing. They talked about donating the land, which is a really significant change. The deal was still thin because of the cost of construction, right? And so it really takes a bunch of players getting to the table, figuring out who can bring what in order to attract capital at scale. And I think that's the biggest thing is get all those players, get all those incentives lined up, create a good, clear package, paired with a long-term vision is really what it takes to get interest in this market.
And then on the policymaker side, what can, say you have, the ear of Governor Polis, what can he do? What can Colorado lawmakers do to help kind of get a handle on it? Help if any adjustments need to be made midstream. What can they do?
Yeah, I'm not sure I have any sense, adjustments, are going to be made or should be made. I think it's continuing to do additive pieces. So identifying incentives that can be paired, for example. So OEDIT does a good job of providing grants and other assistance to local companies with, by the way, an eye towards rural in particular. And having this sort of non-dilutive grant money makes those companies much more attractive. They actually, and of course, the name escapes me right now, created a grant to help 10 companies go out and seek investment, specifically in opportunity zones, right? So they're providing tools and assistance to help companies package themselves, create their value proposition, put together pro formas that are going to be understandable for investors so that they can go out and successfully pitch and raise. And I think that, that sort of thing is a huge part. And then also the other thing, back to, it takes this sort of whole community development. Broadband is probably going to be one of the most critical things for the future of the West Slope and what communities win and lose. You talk about luring in remote workforce workers who will, not if they don't have good internet, right? So continuing to invest and incentivize things that may seem in some way unrelated to the individual deal is also really incredibly important. So continuing to invest in broadband, continuing to support healthcare and childcare in these communities so that we can attract, we can attract workers, people to, to live there is a really significant and important additive investment that states and locals can make that will encourage investors to come in alongside for these other investments, right? Hope that makes sense.
Yeah, and it's also, I think it'd be nice to have a way to somehow track the impacts. Like your fund is really good at, saying, the slides we just saw here, here's what your investment could be. We're predicting this kind of return. Here's the deferment you're going to get. That is super appealing to investors. I feel like the communities and the businesses and the folks that maybe want to relocate to some of these rural areas, if they had an idea on the impact they could have, and there was a way to show, this housing project fueling this business created this many jobs, this much of a payroll that went and had this sort of economic impact, just getting an idea on how to kind of track and chart the impacts and the benefits that some of this money's having in these rural communities would be, you'd have communities lined up if you could quantify that in a chartable sort of way, right?
Yeah, there's a really strong push, from legislation to enforce some sort of impact reporting. Some of the early press, were frankly, there's people abusing the incentives, right? In urban corridors, deals that were already underway, and this kind of rich people getting richer. The economic innovation groups and others have some pretty good numbers showing those, those scales are starting to tip back, and a larger percentage of money now is flowing into areas that really, better qualify as distressed and meeting the intent. So we're getting there, we're making progress, but people want to see that, this government tax incentive has value. And so I strongly believe impact reporting will become an imperative, like a legal requirement for qualifying. And I support that. It is challenging though, right? So our project in Natarita is pretty straightforward. That's a very distressed community, and it's a few $1 million that we're putting into this property to create something really great. We've already tracked over $360,000 that have gone to local contractors, which equates to 15 jobs, just building up that area. Obviously significant for a small town like Natarita. And then ongoing, we'll be able to track the number of tourists that brings in and extrapolate some sort of tax benefit to the community. That's fairly straightforward. A place like Grand Junction, where, I really firmly believe part of their problem is that they have this very aging housing stock. Actually building something where you're not targeting the most affordable rent or, this 60% AMI kind of, rent ratio is arguably as or more important for them, and is going to have a greater long-term economic impact, helping to really develop that riverfront property in Las Colonias into something that's highly desirable, that will attract those businesses, and the good paying jobs and employees that come along with it. And so, it's a different set of metrics that is a little harder to report. And there is no one framework right now that captures all of that well, but there's no doubt that we need to do a better job of quantifying and understanding what's going on so that people can do a better job of getting behind this. Yeah.
Yeah, exactly. Want to encourage folks to jump into the chat there, raise your hand. If you have a question, we can unmute you and then you can ask it live. You can type it in there. We got a couple in the queue here. Robin Hall asked that the first million or the original investment, it can be on anything. She asked if it doesn't have to be an OZ original investment.
Right. So the capital gains of any kind from any prior purchase are eligible to be invested into an opportunity zone and receive that benefit. So, back to stocks, real estate investment, 1031, 1231, sale of a business, anything that would show up as capital gains on your tax return, you can defer, reduce, and eliminate, as discussed, taxes on those gains.
And it's important to know that Shawn works with investors. So the state has a new program. They just announced it yesterday that the Colorado Office of Economic Development and International Trade has been selecting certain businesses that have applied for their Opportunity Zone Capital Accelerator program. So that it's possible the state is working with small businesses who want to be connected to these network of investors and opportunity zones. So there's lots of opportunity out there for business owners as well, and rural startup folks and entrepreneurs with great ideas. It's entirely possible to hook up. They announced 6 businesses that have been selected for this sort of the accelerator program. So there's not only folks like Shawn working with investors, there's state people who are working with business owners to try to connect them with, the networks that Shawn's building. So that's important.
Yeah, and it's worth adding in, right? There are so many great programs out there. I mentioned the OEDIT grant program. That has nothing to do with opportunity zones. We obviously think, this is an incredibly powerful tool. Like, we're hoping to drive, $100 to $200 million worth of equity, right? With debt on top of it into the communities that we're focused on, through 2026. So it's driving a lot of big dollars. But, we continue to participate and support West Slope Angels, as managers of that, non-opportunity zone investments and startups, right? It needs to be sort of the, full picture to make sure we're building, thriving, diverse economies. And so even if maybe opportunity zone isn't a great fit for you, there's a lot of other sources out there. And I'm always happy to talk to people on either side of that, and at least kind of point the right direction, right?
Yeah. And it's good that the state, is sort of recognizing that this first sort of year of heavy investment in the OZ program is really focused on real estate. And the state has recognized that and said, what can we do to elevate businesses and get there, in the eyes of, in front of investors and possibilities there. So pretty cool looking program. Any other questions out there? Nicole's asking about hemp out in Montrose County there in Delta County. There's a lot of hemp businesses that are lining up. Quite possibly the hemp capital of the country is emerging out there, especially on the west end of Montrose County.
Yeah, I know of a couple. We've looked into a couple possible hemp business investments from an OZ perspective. As clear as it is to most of us, the distinction between hemp and marijuana and all those things going on, there's still a class of investors that are surprisingly concerned about that, right? And some of it being too that because this is a federal program, right? The Opportunity Zone incentive, that not having perfect clarity at the federal level of separating those things out and its eligibility. There's this sin clause, where quote sin businesses, which is like a really old school term pulled from, tax libraries forever ago, includes, massage parlors and like packy stores, like, carry out liquor, hot tub businesses and golf courses, right? Like maybe one or two others. So it's kind of a weird mix. But, there was early on, there was a lot of concern that there was not enough separation between hemp and marijuana, right? That unless you could prove it's 100% THC free and all that stuff, that there was some risk. So risk averse investors probably aren't going to jump in from an opportunity zone perspective, but it is absolutely happening. And I'd be happy to talk to Nicole offline about specifics of that deal. And so it is a possible, great incentive to attract investment.
Yeah. And that West End out there, Paradox Valley, and where you're at in Natarita and Nucleus, there's a lot of opportunity out there. It's a beautiful place. And, they're trying to rebuild a second chapter after the uranium mining is sort of starting to flounder. Any more
uranium mine, then, yeah. Robin had put in there about, Ryan had put in something about the 1031. Just to add clarity, as I read the question, roll 1031 and then have the entirety of long-term cap gains reduced to zero. Not exactly. So just to kind of replay that slide, if you realize gains today, you still have to pay taxes on those gains. You're just paying 90% of the taxes in 2026. The 0% or complete tax forgiveness is on the investment in the opportunity zone, right? So you still have your 2026 tax bill. It's the actual opportunity investment is tax free. Yep.
I don't know. Yeah, you might know. You know what's up with the Steamboat launch, that small business starter incubator out in Steamboat? I haven't heard.
Yeah, we run. I got the Steamboat launch posters behind me. I don't know if that prompted the question.
Oh, nice.
So, we had done that every February and August until this year. Two things going on. One, early pandemic stage, and then also we're in the process of reorganizing West Slope Angels to be sort of regional chapters, sort of Northwest Colorado, Upper Arkansas, Vail Valley, Grand Valley, Southwest Colorado, Roaring Fork. We want to bring in Southern Colorado Angels, sort of like Colorado Springs, Pueblo, Trinidad. And so we put a lot of that on hold and we couldn't really hold in-person events, but also wanted to realign ourselves with Greater Colorado Venture Fund. And so we're on the 30th, of course, the Greater Colorado Pitch Series. Then talking with GCVF, about, supporting them in that effort, and we'll kind of be there and helping to support those companies that are presenting, and then turn around next fall and kind of reset how we're doing this, probably doing more virtual pitch events, actually. So we want to keep that going. I think we're going to pull it down to once a year, and still hold one this fall in Steamboat. Yeah.
And
those are awesome events, super fun.
Patrick has a question about food markets. Are you seeing any maybe food providers, markets, grocers kind of stepping up as businesses?
Not on the opportunity zones. Well, actually, yes and no. So we do see a lot of things like agricultural alliances, local food distribution actually doing significantly better, right? As the grocery stores kind of run out of meat from standard channels. I know several people here in Steamboat area, I guess technically Hayden, right? But in our valley, producing pork and chicken that are selling more than they ever have. And so I hope that that's a trend that continues. We've formalized those channels, and local food producers can do better. That's not solving any food production problems or food desert problems in our urban corridors, but on the Western Slope, there's been some agricultural, and I'm going to say benefit to at least a swath of people being able to sell locally. What I do see as a really significant trend, so a lot of eyes focused on housing, including ours. A lot of eyes focused on outdoor hospitality, including ours, right? Because it's an easy way to get out and socially distance. one of the other common themes, surprisingly common, are food halls. And so I don't know that it solves, a food desert problem precisely, but it does in some ways. If we can get 2-3 restaurants in our warehouse food hall in Craig and bring in, kind of that small, cool ethnic something that just brings a little bit of diversity, a different flavor, a different set of foods and spices. That's not exactly a food desert scenario where, like, how do I get fresh vegetables to my home? That's, I think, less of a problem, but food diversity is something that people are really trying to tackle and is a great model for opportunity zone investors.
Yeah, and a great model for entrepreneurs with a good food idea. They roll their food truck up there.
Absolutely.
Yeah, beautiful idea.
It's expensive to start a proper restaurant, but if we can give them a small container and maybe help them get a grant to get some initial equipment, they can start up for very little, grow their following, and then hopefully, they springboard out into a full restaurant. We bring in the next, small would-be food entrepreneur.
Yeah. Cool. Well, we have run out of time here. Bonnie and Mara and everybody with West Slope Startup Week want to make sure everyone knows to click over to the Slack channel. And the idea is that we could still kind of continue these conversations. Both Shawn and I are on that. So if you have any more questions, you can pose those on that Slack channel. We can, kind of keep the whole OZ talk rolling if anybody's interested. I think it's such an interesting topic, and it has such potential to have a just transformative impact in the Western Slope, Colorado. So appreciate everybody for tuning in. Shawn, thank you. That was so informative.
Yeah, thank you. Thank you all.
Thanks, Jason. Thanks, Shawn.